Why I invested in Bitcoin in 2021. Bitcoin's utility is lower than Ethereum's, but that hasn't prevented it from being the world's most valuable cryptocurrency. Some say it has the potential to become a global currency, resulting in exceptionally high demand. But that seems far-fetched to me. People seem to be using Bitcoin as a growth investment or a digital store of value rather than for transactions. Bitcoin's demand as a store of value, in my view, is much lower than it would be as a currency or other daily utility. However, considering its much smaller supply than Ether, Bitcoin's upside may still be important. Consider that there are just 21 million Bitcoin tokens available at any given time. Ether, on the other hand, and several others have no limit. Ether has annual mining quotas, which helps to keep new supply under control. However, the mining process for Bitcoin is much more limited. When a transaction is made on the Bitcoin network, it is processed by decentralized computers, and the fastest computer is rewarded with new Bitcoin tokens. The Bitcoin reward is, however, cut in half every few years, most recently in May. This means that miners are actually earning 6.25 Bitcoin tokens instead of 12.5 earlier this year. Since there are less Bitcoins entering circulation now, the price of Bitcoin will rise if demand remains stable. New demand is coming in from corporate organizations, which is a surprising development this year. Square, for example, recently purchased over 4,700 Bitcoin tokens. And rising corporate demand, combined with the halving of new supply, has pushed Bitcoin's price higher in 2021, up over 250% year to date. After considering supply and demand, I've come up with the following cryptocurrency investment thesis. Bitcoin and Ether both have a good chance of being popular in the future. And since their supply is small, the value of these tokens will increase as demand increases. The statement still holds true today as it did when I purchased Bitcoin and Ether in 2019. When I bought, I promised myself that I would keep it for at least 5 years. I made that promise because, with two highly risky investments, I expect this to be a bumpy trip, and I wanted to make sure I've given myself enough time to see my thesis through. However, I understand that the value of cryptocurrencies could plunge to zero because this is speculative. As a result, I just put a small amount of money into it. And, despite the fact that my hypothesis appears to be right, I would not consider adding more, even if prices increase. The danger is just too asymmetric for me because cryptocurrencies have no inherent value. There are other ways to invest in cryptocurrencies if you like the concept but don't want to take on the danger. There are stocks that benefit from blockchain technology in particular. Rather than speculating about factors outside your influence, you can buy shares in actual companies that generate real revenue from cryptocurrencies. So thanks for watching. I hope you learned a thing or two in this episode. Make sure to like the video so that we can reach out to maximum people and subscribe the channel for more videos. Cheers guys, have a good day.